So the CPI inflation is out and it's smaller than expected. I'm not going to waste your time, so let's get straight into it. The headline CPI came at 2.3%, which is both lower than analyst expectation and last month's print of 2.4%. However, policymakers like the Fed tend to look more at the core inflation to make their decisions on monetary policy because it removes the more volatile component of food and energy and gives a long-term read on inflation. The core CPI came at 2.8% in line with analyst estimates and flat compared to last month. We're not seeing the tariff impact yet for a few reasons. First, this report shows April numbers and the reciprocal tariffs started to be collected on freight leaving their importation country after April 9th. These cargo ships need roughly a month to go from China to the U.S., which means the first tariffs were collected last week. However, we still shouldn't see any impact on inflation in May because these goods need roughly 1 or 2 weeks to move to a warehouse where they will sit for a month. After that, sellers can choose to absorb some of the cost and slowly increase their prices to remain competitive. The bottom line is that it can take 2 to 3 more months before we see the impact of the reciprocal tariff on inflation.